Today we're going to talk about why B2B sales leaders making as much as $500,000 a year or more still somehow end up never building passive income. Say you're making $500,000 in tech sales, you just hit President's Club, and you closed 7 figures in deals last quarter. The problem with that is that no matter how impressive that is, every dollar you make is tied to you hitting quota. And if you stop selling, the money stops coming. That's not passive income. It's just a really well-paying job. And 90% of sales leaders never escape this trap because they assume that just because they're making great money, that they're building wealth. But they're not. They're just trading time for dollars at a higher rate. So in this video, I'm going to show you exactly why most sales leaders never build passive income, and more importantly, what you could do about it if you want to pursue a different path. I'm Mondo Salavanti, I'm a CFP, and I work with B2B sales leaders at tech companies who are crushing quota, but want to build wealth that works for them even when they are not. Let's get into it. So the first reason that many sales leaders never build passive income is because they confuse high income with passive income. And I get it. When you got checks coming in that could be 50K, 80K, even 100K, it feels like you're winning and the money's just going to keep flowing in. But here's the reality. That money only flows when you're working, when you're prospecting, when you're out there closing deals and you're managing your accounts. The second you stop, that money stops too. And that is active income. The trap is that most sales leaders spend their entire career optimizing for higher active income without ever building systems to create passive income. They go from 200K to 400K to 600K in W-2 income, and they think they're building wealth, but they're really just building a more expensive lifestyle that requires them to keep hitting quota forever. So let's start with active income. In my life, I'm a financial advisor running a business. I have some other ways that I make money, but my active income is when I'm actively working in the business, I'm meeting with clients, I'm bringing new clients in the door, I'm providing a service that ultimately, if I am not there, that money stops with it. If I'm not meeting with my clients to give them solutions to their finances, I don't make money. If you're in B2B tech sales, if you're not out there actually closing deals, you don't make money. So we're going to define that as active income. Now, speaking about passive income next, let's bust a very common misconception. Many people I speak to, they own real estate. I'm a real estate investor myself. We have a few properties. We have multiple units in different ways. Airbnb, we have some self-storage, we have residential real estate where it's the more traditional longer-term rentals. These are not passive. And what you do here is a con with real estate. Oh, I'm going to buy a property and then I'm going to get a call on Christmas that next year. Well, let me just give you my personal circumstances. The first year I had a rental property, it was Christmas Eve. I get a call from the tenant who's in our property and the toilets broke. And I'm like, why am I living the real estate stereotype right now? Here's the thing. That's not passive income. There are very few forms of true passive income, but I define passive income as you can sit on your couch, throw on the NFL game every fall, and you don't have to lift a finger, and that income is still going to come in whether you got off the couch or not. Let's talk about the psychological trap I see with way too many people, especially high earners in sales. You're in this position in your peak earning years of your career. You're making more money than you ever fathomed. You're making more than your parents ever made. There's this subconscious belief you develop that it's just going to keep coming. You know how to sell. You've invested in yourself. You have amazing skills. And you're like, you know what? If I blow this money, I'm going to be able to go make up for it, close a couple more deals. We'll fix it then. The problem is if you don't fix your habits now and implement the systems you need now, when you continue to make that money, you're not going to fix it because you're on a treadmill of money going out the door. So what we have to do is put systems in place to help you get off that treadmill. And lastly on this point, let's talk about why this matters so much. Way too many times, I have clients. They hit 45, 50, 55 years old. They've been stud sellers their whole careers. And all of a sudden they get laid off. They can't get a job because now they're the most expensive employee in the organization. Even though you're creating massive value and you're creating a lot of revenue for the business, they ultimately see you as an expense on their balance sheet. So now, rather than continuing to pay you at these high rates, they lay you off, they replace you. So before that becomes your reality in the future, we need to make sure that we capture the opportunity you have today. The second reason most sales leaders never build passive income is because they don't have a system to capture their commission dollars before they disappear into lifestyle spending. And this is huge. I see this all the time with my clients. They'll get an $80,000 check. It hits their account, and just 30 days later, it's gone. And they can't even tell me where it went. Some of it went to taxes, sure. Some went to the mortgage, the car payment, maybe a vacation with the family, but most of it just evaporates into their lifestyle. And here's the thing. You can't build passive income if you're not systematically moving money from active income into income producing assets. You need a system that captures commission dollars the moment they hit your account and automatically routes them to building passive income streams. Most sales leaders don't have that system. So every commission check just gets absorbed into their lifestyle and they start from zero again next quarter. I'm doing a lot of talking about systems and what you should do. Let's talk about the problem first. So if I have a paycheck, let's use a money sign to denote that. And this paycheck for 99% of people, or maybe not 99%, but many people, their paycheck will hit a checking account, which we'll put a C for that. Paycheck hits the checking account, and then what do? We pay our bills, we pay for gas, we pay for groceries, we spend on our life a little bit because we want to have fun with our life and actually enjoy it. But by the time we do that, there's a certain dollar amount that's left. So at this point, what do we have left? Most people, let's just call this like $1,000 as an easy round number we could do math on. Most people will say, okay, I'm going to save 500 to something, maybe some sort of investment. And then we're going to keep 500 in this checking account. We let the month go by. This $500 is still in the checking account. And at that point in time, what happens since then? Nowadays, it's easier than ever to buy something. I sneezed and Amazon just bought something on my phone. Everyone wants me to sponsor their golf tournament, apparently. And Instagram ads are listening to me all the time because I pop on there and there's a new thing that I want to buy. The world is set up so that your dollars go to everyone but you. Just setting up an automated investment from your checking account is not enough to fix this. And that's what many people do, and it's better than nothing, but it won't fix this problem. We need to fix the structure. So I want you to think about opt-in culture versus opt-out culture. A mentor of mine told me about this, and the prime example is when you have a subscription. Show I love. I buy it. I'm paying the subscription. All of a sudden, I binge the show, I watch through it. Then, months later, I'm still paying because I'm opted in. But if reached out to me and said, Mondo, you're paying our subscription, why are you still doing this? You haven't logged in. I'd cancel that immediately, but I'm opted in to pay. So this phenomenon we're talking about right here with your paycheck is what you're opted into. You're opted into spending. That is your default. Here is the way we need to really do this. Paycheck comes in. Next, we're not sending it to the checking account first. We're going to send it to something we call a reservoir. From this reservoir, we will automate money to the checking account. We call this a spending baseline. Put SB for spending baseline. Let's say your bills are $10,000 a month. So you're going to send every month from your reservoir to your checking account $10,000 a month automatically. Also from the reservoir, if we're going to invest, money comes from here. Maybe we have some accounts for a specific purchase, like a beach house. I'll put BH for beach house. Maybe we have a vacation fund. I'll put V for vacation fund. Whatever it is, the reservoir is where the paycheck hits first, and an action has to be taken to spend those dollars. So now, let's say you're making $20K a month net. I'll just use an example. That hits the reservoir. You're spending $10K. $10K remains here. Let's cross out $20K and say now you're making $50K. It's no longer $10K in the reservoir. You still spend the same $10K because you didn't change it. Now you retain the other $40K in here. That spread, by defaulting to save that extra money you now are making, that spread is what changes building wealth from not building wealth to now building wealth. So put another way, let's come down here. If I have a graph, right? We're getting busy on the whiteboard today. If I have a graph, and let's say this is your income, and we'll say that's throughout your whole career, I for income. We'll say this is your spending, S for spending. Most people, when they are operating on this first path over here, path 1, their spending goes up the same route as the same path as their income almost their whole career. It'll go up at the same proportionate rate. On path 2, which is what we do with clients and we've seen be effective in many cases, our new spending looks like this. So everything in between here is now your new wealth potential that you captured, because your spending's still going to increase. You're still going to live the life you want to live, and you're going to do everything you want to do with your family. But now you're capturing these dollars subconsciously as you get pay raises, as you get more checks, as you start to build passive income sources. Your consumption will not proportionally go with your income, and you now become the master of your dollars, not the other way around. All right, quick note before we get to pillar 3. If you're a B2B sales leader making $250,000 a year or more, and you're tired of feeling like you're on the commission treadmill, I work with people just like you to help you build a financial plan that's designed around your commission-based income, your RSUs, your stock options, all of it. And we focus on helping you pursue passive income strategies so you're not 100% dependent on hitting quota for the rest of your life. If that sounds like something you want to explore, there's a link in the description to book a call with my team, and we'll see if it's a good fit. All right, back to the content. The third reason many sales leaders never build passive income is because they genuinely don't know what strategies to pursue. And I don't blame them. Tell you to max out your 401k, maybe open a brokerage account and call it a day. But that's not a passive income strategy. That's a retirement accumulation strategy, and there's a big difference. Passive income strategies are about building income streams that pay you now or in the near future, not just at age 65 in retirement. And most sales leaders have never been exposed to the strategies that actually create passive income, like investments in private credit, dividend-focused portfolios, real estate income strategies, or other alternative investments. These are the tools that high earners use to build passive income, but most sales leaders don't even know they exist. So they keep dumping money into their 401k and hoping it works out. But they're not building the income streams that could give them options in 5 or 10 or 15 years. So let's start with everybody's favorite, real estate. Tell me why almost every sales leader I meet says, Mondo, I want to be this real estate mogul. Here's the first thing I'm going to tell you. Everything has a pro and con. All of the things we're going to touch on in this video will have a pro, will have a con, or multiple. And real estate is no exception. When it comes to real estate, some of the pros, it can become passive income. If you are buying a property, a physical property, and you're the landlord and you're getting a check from your tenant, it could become passive income in a sense of that check's coming in as long as there's no problems. But the cons of real estate, your tenant will have issues. Just the other day, I got 2 different phone calls from my property, from one of my properties, from 2 tenants. It's a 4-unit apartment building, and 2 of them in the same day had an issue. We've been getting some freezing weather in the Northeast, recording this right now in early February, and stuff happens when you're in extreme weather conditions. So with real estate, yes, you could get paychecks. You also could get appreciation of the property, which isn't going to give you income necessarily, but it's an asset that could grow long term. But the cons are you're going to have work as a landlord. Even if you have a property manager, there will be things that you're going to have to step in for, because I have a property manager and he just can't do every little thing for the property. He needs to lean on me sometimes. So that's real estate. Let's go to the next one, dividend stocks. Dividend stocks, I'd also lump in bonds into here. You can have more traditional bonds. You can have municipal bonds. They work in different ways. But let's talk about these 3 different things. So dividend stocks are stocks you buy on the stock market that pay a dividend, which is basically the company giving back a portion of its profits to the shareholders. Pros of this, you basically own the stock, you buy an account, and you're going to get these dividends as long as the company pays it. They're not guaranteed. It's no source of guaranteed income. And a big downfall I see often, people will buy a stock or an investment on the stock exchange just out of how high the dividend yield is. Dividend yield is a percentage of the stock price that the company is going to pay out. So if it has a dividend yield of 5% that it declares and you have $100,000 in that stock, they will pay out $5,000 if that is what they declare. It's not guaranteed, again, let me say, but just because they pay that out doesn't mean that your $100,000 is safe or is going to make money. Another misconception, you could actually see them cutting into profits of the business that is leading to the stock price declining. So you got to be careful with dividend stocks because there's two sides to every story, and you have risk that you could lose your principal dollar amount that goes into these. Bonds, you have obviously things like corporate bonds, which are debt that is issued by corporations. So you have companies, you're basically issuing debt to them, and the money that you're giving to them, they're paying you back a coupon, which is the interest payment off of the bond. It's not necessarily guaranteed. You have risk of losing the principal with bonds as well if you sell at a time when the principal is at a lower price, because with bonds, they typically have an inverse relationship to interest rates. So if interest rates go up, bond prices typically go down. Interest rates go down, bond prices typically go up. So you do have some risk there. It's less than stocks typically, but there is risk there. Municipal bonds are interesting. They work pretty much same way as far as interest rates go up, prices go down, interest rates go down, prices go up. The income off the coupon with municipal bonds is tax-free. So that could be interesting. There's not any guarantees there though, and you're subject to change with what they're paying rate-wise at any point in time. Beneath the surface, when you look at bonds, there's a lot of other types, but they're a more conservative investment typically, and they could produce some passive income. Moving on, we'll talk about private market investments. So you have private credit and you have private real estate funds. With these, I need to be clear, and this goes to show for all these, I'm not recommending any of them. I'm not here saying buy any of these investments because ultimately you need to talk to a financial advisor and see what's unique and good for your circumstances. But when it comes to private credit first, this is similar to what we just talked about with corporate bonds. Private credit is just their private companies. So if I'm a publicly traded company, I'm on the stock exchange. I could go buy and sell and trade on the New York Stock Exchange. If I'm not, and I'm a private company, they also need capital and they get it through investors who will give them capital. It's issued as private credit, which ultimately means they're going to pay you an interest rate back for the money that you give them. No guarantees here. Rates are subject to change, but it could be a higher yield than you could get elsewhere. It could be a good place to generate some income. The cons of private credit, there's usually some higher fees. Also, you have a loss of liquidity. So the dollars that go in, you can't just go take them in and out whenever you want. Private real estate funds, same thing. These can be a good alternative to traditional, like buying a real estate property and being a landlord, because you put your money in, you truly get your payment from the fund, whatever they're paying out in yield on the fund. And you could get appreciation of the underlying assets of the fund from the money that you put in. But typically high fees, you lose liquidity, and it's not something that you want to be throwing all your eggs in one basket because you do lose access to the funds and they're not totally liquid. So all of these are just simply examples of what you could use. There are a couple more that we could get into here. Whatever you're looking at with passive income, there's no end all be all, and nothing should just get your dollars simply because it produces passive income. So that's why many sales leaders never build passive income. They confuse high active income with passive income. They don't have a system to capture commission before it disappears, and they don't know what strategies to actually pursue. But here's the good news. If you're watching this video, you're not like many people because you're actually thinking about this stuff and you're asking the right questions. This puts you way ahead of most people in your position. Now look, building passive income doesn't happen overnight. It takes time, it takes discipline, and it absolutely takes a plan. But if you're making 250K, 500K, even 750K a year, and you're not systematically building passive income streams, you're leaving a massive opportunity on the table because you're going to wake up at 45 or 50 years old, burned out from hitting quota, and realize you're still 100% dependent on your next commission check. That's not freedom at all. So if you want to start pursuing passive income strategies, first get a system in place to capture your commission dollars before they disappear. That is step one. Second, start educating yourself on the strategies that actually create passive income, like dividend portfolios or real estate strategies or investments in the private market where they make sense, because these are tools that are available to you. And third, if you want help with this, work with someone who actually specializes in helping sales leaders build passive income. That's what we do at Freedom Path Wealth. And if you're interested in exploring what that could look like for you, there's a link in the description. Book a call. We'll walk through your situation and see if it makes sense to work together. No pressure, no sales pitch, just a conversation about whether we could help you pursue the passive income strategies that could give you options down the road. All right, that's it for this video. If you got value from this, hit the like button, subscribe to the channel. Thank you for watching. I'll see you in the next one.